All right, here we are back again. First thing I want to do, I think I only assigned one homework problem. So let's go ahead and go over that. That was exercise 5.1, right? Last lecture we talked about the purchase cycle of a retailer or a merchandiser, okay? So we're going to go over this homework in regards to the purchase cycle, and then we're going to switch over to the sales cycle for a retailer or a merchandiser, okay? So let's go ahead and take a look at exercise 5.1 on page 207 in your book. All right, prepare journal entries for the following transactions for a retail store. And assume a perpetual inventory. April 2, purchase merchandise from John's company under the following terms. $5,900 price, invoice dated April 2, credit terms 215, net 60, and FOB shipping point. All right. So the first entry, let me back that up a little bit. Straighten that out for you. First, the April 2 entry, not too tough. Debit merchandise inventory, credit AP. Okay, credit AP. And it's AP to John's. You can see that what they've done there. You'll see this more and more as we go along, is a lot of times on the accounts payable and on the accounts receivable, they'll say the specific vendor in this case, and with receivables, a specific customer. It's a little easier to keep track of whose receivable you're talking about. So this is the AP to John's, okay? April 3rd, paid $330 for the shipping charges on the April 2 purchase. Okay. Now you might think that we debit shipping expense or transportation expense or something, but we don't, do we? We debit merchandise inventory. We want the cost of transportation to be captured into the inventory asset value. Okay? So we debit merchandise inventory here. Okay? You mean in the April 2? Yeah. No, it's not. The shipping's not included. So what'd you do on April 3, Lauren?
I just took it off the accounts payable because I thought it was already in there.
Oh, okay. No. Yeah, you don't want to debit delivery expense. That's wrong. You want to capture it into the cost of the inventory, merchandise inventory. Okay? Does that make sense why we do that? Let me give you an example. Let me shift away. Okay? Let's say that I buy, let me think of a good example. Okay, let's say that I'm a piano retailer, okay? Let's say that I'm a piano retailer, okay? Now, I have been buying my pianos from Company A, okay? And for Company A, the price of this specific type of piano is $1,500, okay? $1,500, okay? Now, they're here locally, okay? They are here locally, okay? So the delivery actually is free, okay? So what's the total we have wrapped up into that piano? $1,500, okay? Now, let's say that I have a chance to buy from Company B. And that same piano only has a cost of $1,400. The only problem with Company B is they're in St. Louis. Okay? And there's a delivery charge on there. There's a delivery charge of $220. Well, if we kept track of delivery expense, in a separate expense, we might think the cost of goods sold in this situation for these two pianos is $1,500 and $1,400, right? But that's really not the case. That's really not the case for Company B, is it? We really need to be saying that the cost of goods sold was $16.20. Okay? That is the reason that delivery expenses are captured in merchandise inventory. Okay? This will make a little bit more sense too when we start looking at chapter 6. Okay? Common mistake. Like I say it, I love it when you make mistakes on your homework because that's a mistake you would have made on the test, but now you got it out of your system. Okay? All right. The other thing you got to probably recall is these shipping charges they're probably to a separate shipping company, like FedEx or UPS or something. Okay? April 4th, returned to John's company unacceptable merchandise that had an invoice price of $900. So we decrease our payable and we decrease our merchandise inventory, don't we? Okay? Now, what is the amount that we owe John's at this point? $5,000. The $5,900 minus the $900. Good. April 17th, we sent a check to John's company for the April 2 purchase. Net of the discount and the returned merchandise. Okay, did we pay within the discount period? Yeah, we did, because this is a 2/15. Yeah, we did on the last day. We're good managers of our cash, right? So, we didn't have to pay them the full $5,000, did we? We only had to pay them 98% of $5,000, which is $4,900. The entire AP of $5,000 goes away. We don't owe them any more. And the merchandise inventory, we credit it for 100 so that it will be reflected for the true amount of cost. Okay? Nah, as long as they're both credited, doesn't matter if you list merchandise inventory first or cash first. Okay?
Okay. Question.
Yeah.
So I debited sales discounts
Okay.
and cash versus merchandise inventory.
That's wrong. But let me tell you, you made a common mistake. We are not selling anything here, are we? Are we selling anything? This is why, and I'm glad you said that, Brian. I couldn't set that up better. The biggest mistake that people make in this chapter is they got the wrong hat on, so to speak. What do I mean by that? What I mean is a retailer, and we're from the viewpoint of a retailer, does a lot of purchasing, so he's got his purchase hat on, and they do a lot of selling, and they have their sales hat on. If you have the wrong hat on, then you can be totally in the wrong set of accounts. We're not doing any sales here, are we? This is all a purchase that we're doing. We're not John's company, are we? Okay? So accounts like accounts receivable, sales discounts or whatever, those don't have anything to do with the purchase cycle. Okay? Nothing to do with the purchase cycle. So make sure you're shifted into the right gear. As a student, the thing that I always did was ask myself, okay, am I purchasing here or am I selling? Okay, I'm purchasing. Okay, and I'd kind of shift my brain into that set of those purchase accounts. Lauren, did you have a question?
Yeah, why when you added $330 to merchandise inventory from transportation costs, how come that's not reflected when you get your discount?
Well, because this is to a separate company. That's to like UPS. They're not from the vendor who we bought our goods from. Great question, though. Great question.
Okay. So we have $5,900 worth of merchandise.
$5,900 for the merchandise inventory at the beginning, yeah.
And we send them $900 worth of inventory back.
That's correct.
And so now we go down here, and it's like we're sending them another $100 worth of merchandise back.
No.
I mean, that's
what it might look like.
Yeah, that's what it looks like.
That's what it looks like, but it's not. There's several situations when your merchandise inventory account is going to be credited or lessened. One of them certainly is if you return the goods, okay? But the other one would be because merchandise inventory needs to reflect the discount that you eventually got, okay?
That's why I would think you'd use like a sales discount or a
That
merchandise
sales discount, big guy.
or
It's like what you paid for it.
It's what you actually paid for it, okay? So if you did a T account here, we initially debited it for $5,900. Then we returned, no, I'm sorry. Then we debited it for $330 for the merchandise inventory delivery charges. Then we reduced it by $900, right? And then we reduced it by $100. So total, in the end, that merchandise inventory, let's see, that's 5,000. I think that's 5,230. Is it? Somebody bang that out.
5,900. So.
Okay, that's 5,000 plus. I think that's 5,230.
oh well, yeah. Because he's
You're
doing,
okay. I thought you were.
He's doing the math for.
Okay.
Hey, never question me, especially on camera. Okay, I'm just kidding. Okay, 5,230. So yeah, there's a lot going on, but in the end, that is how much true cost we have wrapped up into that inventory. And if we don't account for that properly, certainly we could end up making a wrong sales price decision, right? Okay? We could make a wrong sales price decision. Does that make sense? So at the end, we reduced that merchandise inventory by 100 because we did not pay that $100. We paid less than what we initially recorded it at. Okay? Now you have a bunch of things going on. It might be easier to look at an example that doesn't have delivery or a return. That's what I would encourage you to do. Take a look at the original slides on your PowerPoints where we talked about purchase discounts.
That's what I was doing.
Okay? Okay? All right? Take a look at it. If you're still confused, we can touch base afterwards, okay? All right. Let's go on to the next situation. April 18th, purchase merchandise from William Corporation under the following terms. $12,250 price, invoice dated April 18th, credit terms of $210 net 30, FOB destination. Okay, well, when we purchase the inventory, we debit merchandise inventory for $12,250. Okay? All right? I don't think anything too hard there. Now, notice the shipping terms were free on board, clear to the destination. So it's not surprising that there's no delivery bill here, is there? The other was FOB shipping point. Okay? All right, after negotiations, we received from Williams a $3,250 allowance on the April 18th purchase. Now, this is a purchase allowance situation, not a purchase return. However, it's going to look very similar journal entry-wise to the purchase return. And there is the entry. This is a purchase allowance. This is a purchase return. And notice the same accounts are debited and credited. Now in one, in a purchase return, we actually returned the goods to the manufacturer. In the other one, we did not. What they said is, hey, keep it. This is like the scratched tables that we talked about last period. They said, keep the goods. We will just reduce what you owe us. But of course, if that's the case, we also have to reduce what the merchandise inventory is held in inventory at, the cost, okay? So that is why that's reduced, okay? Okay, how much do we owe Williams? $9,000. Do we have to pay it? We don't have to pay the full amount, okay? we only have to pay 98% of that, which is 8820. And the the rest of the accounts are as follows. We've done that several times. Now, what if we didn't pay within the discount period? Well, then we would just debit AP for $9,000. We'd credit cash for $9,000, right? But we did pay within the discount period. Okay, cool. Now, this is all under the perpetual inventory system, where we perpetually want to know the value of our inventory, which is why we did this T account. We perpetually know the value of our inventory when we do this, okay? Because it's all going to merchandise inventory.
So what about when we go to sell?
Well, we're going to go to sales right now. You excited? We're going to do the sales cycle right now.
In some companies,
Spencer.
do they keep their merchandise inventory account separate so they can keep track of maybe specific inventory from a certain vendor?
I think this is a good question. It seems like this is going to be a good question, but I'm not quite
Seems like it
understanding what you're asking. Help
Would
me
they
out.
have like, with accounts payable, you have like John's, which is
Yeah.
a separate account. Could you have that for merchandise inventory as well from certain vendors?
Well, this is a good. It's a good question, and here's the way I'll answer it. Right now, we just keep debiting merchandise inventory, right?
Yeah.
And you will have on your balance sheet merchandise inventory, and it could be a pretty big old stinking number, right? Keep in mind, though, that somewhere there is a detail of that amount. Okay? You're going to know, at Best Buy, you're not just going to have merchandise inventory, $27 million or whatever. You'll have that, but somewhere is a detail
Yeah, I get it.
of how many washers and dryers there are, how many computers there are, how many DVDs there are, everything. And then if you even go into that detail, you can probably look how many washers and dryers are Whirlpool, how many washers and dryers are Kenmore, or whatever. So all these numbers are backed up by details. Okay?
Yeah.
That's especially true, as we'll find out in chapters 9. With accounts receivable, you can say on your balance sheet, accounts receivable, $32,900. Well, somewhere in there, you better have the detail exactly who owes you what, right? Good question. Very good question. Okay. All right, let's go back to the lecture. And I want to pick up now on the other cycle. Not the purchase cycle, but the sales cycle. Okay? Now, make a mental switch of hats in your brain. We are no longer, as a retailer, purchasing from a manufacturer. Now we are selling all this stuff that we've been purchasing. We are selling it to our customers. Okay? So let's take a look at the PowerPoint. Accounting for merchandise sales. Now, here you have a partial income statement for Matrix Inc. And you have their sales. Now, as a reminder, sales is what we call the revenue account for a merchandiser. It's an income statement account, of course, has a credit balance. But they show us what the difference is between sales and net sales, because we're going to learn about something called sales discounts and sales returns and allowances. Now, I'm going to say something real important here, okay? So while on the purchase cycle, we do not have specific accounts that are debited and credited called purchase discounts and purchase returns and allowances, we don't have those, do we? In any of those entries we made on exercise 5.1, did we ever debit or credit an account called purchase return or purchase allowance? We did not. But on the sales cycle, we do have those accounts. We do have those accounts. Okay? Now, what types of accounts are sales discounts and sales returns and allowances? I'm glad you asked. These are what are called contra revenue accounts. Now, we've talked about contra accounts, haven't we? What does contra mean? on the other side are against, right? So revenue accounts are credit balance accounts, correct? So contra revenue accounts are debit balance accounts. Okay? Now, if you haven't figured me out by now, I love to ask on the test, what type of account is blank? Because my feeling is if a student doesn't know what type of account it is, doesn't know what financial statement it is, doesn't know if it's a normal debit or credit balance, then they probably don't know what's going on, okay? Remember those flashcards we made what seemed like an eternity ago? Do you still have those? If I were you, I would add these new accounts as we go over them. Add those to the flashcards, okay? Your whole accounting and business education career will be a lot easier.
So sales returns and allowances are debit accounts.
That is correct. Sales returns and allowances is a contra revenue account with a debit balance, as is sales discounts. Sales minus these contra revenue accounts gives us net sales. And if we subtract out cost of goods sold, we get gross profit. That's also called gross margin at times. You with me? Okie doke. We're going to talk about now the journal entries that you make when you sell things as a merchandiser. So you've got your sales hat on. Get all that purchase stuff out of the way. That's something else. Good job there, Jake. Yes, I should make literal hats that you can turn around, shouldn't I? I know it. Someday I'll do it. Okay? When you sell merchandise as a retailer, look at how we do this. On March 18th, Diamond Store sold $25,000 of merchandise on account. The merchandise was carried in inventory at a cost of $18,000. The journal entries for this sale are as follows. Now note, very important, there are two journal entries, aren't there? There are two journal entries for a retailer who makes a sale in a perpetual inventory environment. First entry. Here are going to be the higher numbers, usually, where you have to keep track of how much revenue you earned in that sale and how much the customer owes you, right? So you debit accounts receivable and you credit sales for $25,000 in this instance. But you also, since we perpetually or on an ongoing basis keep track of our inventory, we have to make this second entry too. We have to credit merchandise inventory for $18,000. That is, in effect, reducing our inventory because we don't have it anymore, do we? The customer just took it out the door. So we credit merchandise inventory and reduce it, and we debit cost of goods sold. We debit cost of goods sold. And cost of goods sold is a debit balance account. For your purposes, you can kind of think of it as an expense. Okay? Now, it's very important that you understand this entry. Take a look at it again. There are two entries. I don't want you to combine them into one entry. Okay? Now, what I want to do here is, let me see if that slide is still there. What I want you to do is, let's take about a 60-second break. Without looking at your notes, get a blank piece of paper out, turn your PowerPoint over or something, see if you can make the two journal entries for this situation in purple. Don't worry that it's titled sales discounts. Just make the two journal entries for the situation that's on the screen right now. I'll give you about 60 seconds. Let's see if you can do it. Okay, let's take a look at this. The answer is this right here, okay? Accounts receivable and sales are debited and credited respectively for the $6,000. The cost of goods sold and merchandise inventory are debited and credited for $3,500. Now let me tell you where students make their mistake many times. They know in this situation, they know that there's an accounts receivable and a sales and a cost of goods sold and merchandise inventory, but they get them all mixed up. So they'll write some entry like this: accounts receivable, cost of goods sold. Oh, I think this is merchandise inventory, and this is sales. Oh, I don't remember which has the big accounts with the big numbers and the little numbers. So is this 6,000? Is this 3,500? No. So they recognize that these two numbers are going to be used, 6,000 and 3,500, and they recognize that these are the accounts that we're going to debit and credit, but they get them all mixed up. Okay? The other thing that students seem to do is they do something like, oh, I'm trying to think. They make some sort of entry where they combine it, and that's wrong too. Okay? There's only one way to do it, and that's this way right there. Okay? So, make sure you know how to do that. You think this will be on the test, Brett? Not probably. The only chance it won't be is if something tragic would happen to me. Okay? And you have a new teacher who doesn't love you as much as I do. Okay? So, I want you to be able to do this. Okay? Okay, we're going to move on here, though. We got a sales discount here. We got our sales hat on. How much does the customer owe us at this point? $6,000. Okay, thank you. On June 17th, Barton received a check for $58.80 in full payment of the June 8th sale because we offered terms 210 net 30 to our end customer. So they did not pay us $6,000. They only paid us cash of $58.80, which is 98% of $6,000. Okay? Now, the entire accounts receivable is credited or lessened because they don't owe us anymore, right? Now, notice, what does that 2% go to? That 2% goes to sales discounts, doesn't it? Okay? I didn't circle very well. My mouse isn't working, okay? But you get the idea. That 2% goes to sales discount. Don't put it to merchandise inventory. That's in the purchase cycle when we do that. This goes to that contra revenue account of sales discount. You with me? I'm telling you, this is all the sort of thing that when you watch me do it, you're going to go, this makes sense, baby. Bring that test on. I'm ready to take it now. This all is just so logical, it makes sense. But then when you have a blank piece of paper, all these accounts are going to be commingled in your brain, and you're going to go, I don't know which goes where. So don't think by just watching this. This seems very, very simple. Please do not make the mistake of just assuming that you can create all these entries on a blank piece of paper. Okay? It's two entirely different things to understand what's happening on the PowerPoint versus being able to produce it. Okay? All right. Let's talk about sales, returns, and allowances. On June 12th, we sold merchandise costing $4,000 for $7,500 on account. Credit terms were 210 net 30. Once again, we have two journal entries to make, don't we? We debit AR and credit sales for $7,500. And we debit cost of goods sold and credit merchandise inventory for $4,000. Okay? Now, how much does our customer owe us at this point? $7,500. Okay, keep that in mind. Okay, on June 14th, merchandise with a sales price of $800 and a cost of $470 was returned to us. The return is related to this June 12th sale. So, the entries that we make are thus. Okay? Now notice, these are almost the flip-flop debit and credit-wise of the previous entry. Look at the previous entry. AR sales, cost of goods sold, merchandise inventory. Now the entry we make is sales, returns and allowances, AR, merchandise inventory, cost of goods sold. So these are in a different, reversed order from what they were previously. And this is all the same, except this isn't just sales. We don't debit sales, we debit sales, returns, and allowances. Okay? We debit sales, returns, and allowances. And that is a contra revenue account with a debit balance. Right? So we have to make two entries here because we have to reduce the amount of receivable because they don't owe us that full amount anymore. We want the net sales to reflect that there was a sales return and allowance. But we also have to debit merchandise inventory because we are putting those items back on the shelves. Now this might be different if the items were totally trashed or something. But here, going back to the journal entry, here we debit merchandise inventory, increase merchandise inventory because it's going back on the shelf. And certainly we have to credit or reduce cost of goods sold because in the end, the goods weren't sold, were they? Okay? Now how much do they owe us at this point? Well, they owed us $7,500. We reduced their receivable by $800, so they owe us, what is that, $6,700? They pay within the time period to be able to take the discount. So our entry is this. Their entire receivable of $6,700 goes away, but they only pay 98% of that in cash. That's all they have to pay. The 2%, the $134, is debited not to sales returns and allowances, but to the other contra revenue account, which is sales discount. You with me? Okay. What I want to do now is, let's see if we can do this real quick. Quick study 5-2. Let's take a few minutes. I'm not sure you'll get through the whole thing, but let's work on quick study 5-2 here in class. Okay? Quick study 5-2. Okay, let's go ahead and go through this. We don't have a whole lot of time, but I want to make sure you at least got one of these done before your homework. There is the April 1 entry to record your sales and to decrease your inventory and record cost of goods sold. Okay. Did you get that? Yep. Okay. And then what happened on April the 4th? They returned merchandise, we gave them credit, and we returned some stuff to inventory, right? So we have 2 more journal entries to make on April the 4th. And we make those, this is just like the PowerPoint example. Okay? Now at this point, how much do they owe us? $4,000. Do they pay within the discount period? Yes, they do. So they do not have to give us, they do not have to pay us the full $4,000 in cash. They only have to pay us 98%. Okay? Now keep in mind, it seems like every example we do is a 2% discount. There can be 1% discounts, there can be 3% discounts. Okay? So don't think it's always 2%. You have to look at the discount terms. 210 net 30, or is it 310 net 30, or whatever. Lauren. That means if you don't pay by the 10th day, you do owe the full amount in 30 days. Okay? Make sense? All right. Here's our homework. There's a little more homework than usual. Okay? But a lot of them aren't too long. But I want you guys, some days there's going to be a little bit more homework than others. It's just the way it is. But what I want you to do is I want you to read these pages, start at the bottom of page 187 and then read through 194, and I want you to do these problems right here. Okay? Now I only gave you one for this for today because I couldn't get as far in the last lecture as I wanted to. But next period we'll be mainly going through homework, and that'll be the ones that are up there on the screen right now. Okay? So make sure you copy those down. Do your homework. You don't learn this stuff by watching me do it. Do it yourself, okay? And next period will probably be the last one on Chapter 5, and then we'll be starting Chapter 6, okay? All right, guys, have a great day. We'll see you later.